Morning traders, welcome to the webinar. It's Wednesday, June 12th. How's everyone doing? Please tell me you took those trades from last night's recommendations. Did anyone take those trades? Number one, we had pound New Zealand, euro Australian dollar, pound Aussie, and euro New Zealand dollar. I had a trailing stop and I was taken out with 146 pips on one pair and 137. I still have two pairs open. I know I said I was targeting 200 pips each, but at one point I saw how fast the market was moving, so I decided just to stay in and put a trailing stop loss, and I'm still in these trades. Anyone take these trades? We're going to go over it, so just want to make sure. Just want to know. Great, Jermaine, you took pound New Zealand and euro New Zealand for 80 pips total. Okay. And Robbie, you took all trades. Terrific, guys. Okay. You've got to be careful with stop losses, tight stop losses on these pairs, because if you 40 or 50 pips are not going to do it. The markets can retrace 40 or 50 pips easily. So I'll go on the 4-hour chart and just let's analyze these trades, because they were very good setups and my stop loss was above the swing high. I was not going to get out of these trades, and this has the potential to turn into huge. It could be a couple of thousand pips, but of course we don't know that. So let's analyze it. We don't have any. I thought we had news events at 8:30, and I was mistaken. That's for tomorrow. Okay. Anyway, last night coming into the market, all pairs on the 4-hour chart, price was below the main pivot point. Let me throw in 21 moving average line because that's significant. It's really important to, I just want to show you exactly what I do. Well, at the time of entry, price was not below the 21 moving average line, but it was on the 1-hour chart. So let me look at the 1-hour chart. Okay, and we did have a retracement, and markets always like to retest the highs after they rally or they sell off. There's always a period where the market starts to retrace, and I wasn't concerned. I saw the market retrace, and I was down at one point, I think 80 pips on each of these pairs. Well, maybe not so much. Let me see. Trade was taken here, I think, on the euro New Zealand dollar, and it retraced. Yeah, I was down. I remember being down about 80 pips, but my stop loss was above the main pivot point. I wasn't concerned. I was just trying to figure out my exit. So I've got a tight stop loss in all of these. So let's just analyze the markets. Let's start with the 1-hour chart. Coming into the session, the market was below the 21 moving, or rather the main pivot point. That was my main concern. We already established that we had a nice exhaustion candle on the daily chart. Okay, so we know that. We know on all these pairs they mirrored each other. So we just needed to have some confirmation that the market was indeed going to, turn around and head south. So a couple of things you could have done. Okay, and of course in hindsight it's always easy, but I'd like to review these trades because it's important to understand that when you see exhaustion candles on a daily chart, then these moves could be substantial, and I like taking them on pairs that really move. Okay, and these are the pairs that really move: pound New Zealand, euro New Zealand, euro Australian dollar, and pound Australian dollar. So coming into the London session, here was a trend line. I should make this bigger so everyone can see a lot clearer. Is that there's several things you could have done. Okay, let's first go to the daily chart. We have a nice exhaustion candle, right? and the candle is bigger than the previous candle, which is very important because I would have never taken this trade if this candle here was larger than the exhaustion candle, right? So that was the first thing I had to establish. And then I'm looking at a 4-hour chart, and I notice this pattern. It looks like an evening star, sort of. It's similar to an evening star. It's not on this pair. It is on other pairs. And then I drew a channel from this swing low all the way up. So here's the channel that was finally broken. Okay, so let me look on the 1-hour chart how that looks. So that's a trend line that was broken. You could have taken a trade later and still, you know, made a lot of money. Now the exits usually before the New York session, but because I was basing this trade on the daily chart, the New York session didn't really matter to me. This is a more longer term trade. Yes, I probably will exit these trades soon if it does retrace, but then I'm going to start looking for entries to sell again, because based on the daily chart. Okay, so there was the trade. If you didn't, if you got stopped out, I'm sorry, but you cannot put a tight stop loss on these pairs. And when you trade off the daily chart, you need at least 100 pip stop loss. Okay, just remember that this trade was based on something we saw in a daily chart, not on a 1-hour chart. Okay, and it was confirmed on the 4-hour chart. And all we needed to do was either wait for a trend line break. Price coming into a new session was below the main pivot point, and that was so important. Okay, let's look at other pairs. Same thing. It mirrored. No point really going into any of these other pairs because I would be saying the same thing. I'm just repeating myself. It's just the same thing. Here's a trend line coming into a new session. Price is below the main pivot point, then finally below the 21 moving average line. And when you have both, when you have price below the 21 moving average line and the main pivot point, then the market should sell off and then find support at S2 at S3. Remember, it's still early and the market could continue to go south from here. Because why? We're basing this trade off the daily chart, not the 1-hour. And when you trade off the daily chart, you need to have at least 100 pip stop loss, and you need to expect at least 200 pip run, especially on these pairs. Okay, and here's the pound New Zealand, and again on pound Aussie. So I'm up 242 pips and 263 pips. I do have a tight trailing stop loss. So if I get taken out, I'm fine with that. Okay, I've met. My goal is 100 pips a day, and I've already made over 300. 2, 4, 6, over 600 pips in one day. You cannot do that every day, unless you're trading off the daily chart. Unless you see something clearly on the daily chart that tells you, yes, the market is not going to go up any higher, and there was the trade. Okay, it qualified. All right. Anyone else took these trades? Wow. So are you still in these trades and you're up 365 pips? This is awesome. This is great. Really happy to hear that. Anyone else? Love to hear success stories. Anyone else take these trades? Okay. Just remember, when we trade off the daily chart, absolutely cannot have a tight stop loss. You have to give it breathing room, because if you just go back in history and you look, let me just do this really quick. For example, here we had a color change candle. Market sold off. Now this is a retracement, not a reversal, because the market's still in an uptrend. So you could have done a number of things here. Swing low to swing high, right? Price bounces off that 38% retracement level. Now, if you took this trade, let's say, off to this candle, then your stop loss needed to be below the swing low, which is a substantial amount of pips. Okay, if you took this trade here, because that would be about almost, let's see how many pips that would be. 53. Yeah, it's got to be at least 60 pips. So you have to give this a lot of breathing room, okay, guys? All right, it's very important. You know, even if you just were able to take one trade, it doesn't matter. What matters is that you guys traded with me. I saw something on a daily chart, and we're going to see this over and over again. Okay, price action. We trade price action. It's the most important way to trade. Okay, so we had an evening star. I'm sorry, not an evening star. Exhaustion candle, kangaroo tail, a hammer, whatever you want to call it. And it was bigger than the previous candle. That's how you qualify that candle. Okay. So, and price, remember I was talking about price retesting the highs, and I was talking about going up 50% of that wick. Remember that? Hope everyone remember that. I was talking about expect this to retrace. And actually, these are levels. These are great levels to enter trades. When you see a nice reversal candle, then wait for a retracement. I took it way too early. I should have waited for that retracement, but I got so excited about that trade setup, and I saw all four pairs. They were all correlated. They're correlated pairs, and they all had the same thing. Okay? They all looked the same, and I got very excited, and I knew, you know what? We're going to make a lot of money off this trade. Let's just take it. If it retraces it, maybe I'll just add positions, put my stop loss above the swing high. I have no problems having at least 100 pip stop loss. And it went, what? The entry I think was here. It went up about 80 pips before it collapsed and went down. Okay, so that was the same on all these pairs. Okay. So, great. I'm glad everyone started out, especially you guys that are new. I mean, you were able to, capture a huge amount of pips and you just started. So that makes me really happy. So I still have two positions open. It's 246 pips on this pair and 265. So I'm going to keep these open, tight trailing stop loss on each. And if I just get 200 pips out of each one, I'm okay with that. Okay, so we'll continue to look for setups on the daily chart. When you trade these four pairs and you see really good setups on the daily and 4-hour chart, yes, the pips are substantial. Say, the average daily range on these pairs is sometimes more than 200 pips a day. Okay, that's why I like trading them. Okay. Any questions on this trade setup? Do you have any questions at all? Is the trailing stop loss fixed, or it moves? It moves on its own. As the market moves down, it moves lower. And it's almost going to take me out, actually. I think I've got about 20 more pips before it takes me out. That's okay. Okay, but I had to put a trailing stop loss because I saw how fast this was going. And I didn't want this to turn around and go back to this, to the swing high, to the support level, or rather resistance level, and that would have been, not good. So I'm glad it continued to go down and didn't at one point retrace. Only thing is, it's 8:30 in the morning, and we may have a bit of a retracement. I anticipate the market continue to go down, but on the 1-hour chart, I think there is a color change candle, and we may have a little bit of a turnaround. Yeah, there we go. 1-hour chart. We have color change candle. Add it S2. And let me just do this. Okay, let's draw this. Here's the swing low, right? Remember we were talking about this yesterday, using fib extensions to help us determine where price may find support. And this 161 extension is up here. So the body of the candle has actually broken the 161 extension. So the next stop is down here, 261, which is also an S3. Now that would be also a great place to take a counter trend trade because we have overlapping fib extension at a pivot point. Does everyone see that? Let me make this thicker so you can see it better. S3 overlapping fib, or overlaps with the pivot point, not an overlapping fib. But I took the swing low, today's swing low, and yesterday's swing high. And you go from right to left. and then it gives me the extensions. And notice that initially it bounced off the 161 extension, went back up, and then broke it, and which is a good sign. That means that price should continue to go south if we have a body of the candle that broke. You know, there's no guarantees. It could shoot back up and keep going. We don't know, but we know that at least the market came back, came down to the 161 extension, and that would have been, a good exit. I'm glad I didn't exit there. Okay. Remember, these trades are based on the higher time frame. So if you see something on the 1 hour chart that maybe you think that the market's exhausted and it's ready for retracement, don't get fooled by smaller time frames. Okay, this trade is based off the higher time frame, 4 hour and daily chart, and clearly we're in a downtrend, not an uptrend right now. Okay, the market's completely had a reversal candle, and when you have, and this is a good thing you can do, you can go back in history on a daily chart. Okay, I would really suggest doing this on a weekend, on a time, and just take 10-15 minutes. Go back in history and see if you can find an exhaustion candle like this. Remember, the candle before this exhaustion candle needs to be smaller, or else this doesn't work. Okay, and I would rather see it after a long run, not when the market's consolidating. If it's a long run, then you see a candle like this, then you say yes, it's bigger than the previous candle. It's a nice exhaustion candle. Take the trade. Stop losses above. So I would do is go back and see if you can find something like this. On the daily chart, it's going to be rare. You don't see, that's why I took that trade. I was so excited. You don't see exhaustion candles like that on a daily chart every day. Okay? It just doesn't happen. But when you do see them, the moves can be substantial. Here's one right there. See this move? The market sold off. And can everyone see this candle right there? See this candle? Okay, that's an exhaustion candle. And it's bigger than the previous candle. Let me highlight it. Okay, this candle here is an exhaustion candle. It is a hammer. And it is larger than the previous candle. So this qualifies. And there's a lot of reasons to buy at these levels. Okay, this is what we do in the mentorship program. Okay, here was a support. It initially broke the support. So at one point, this was a huge red candle. And what happened? It rejected these levels. So this is called a false break. And the body of the candle closed inside the support, and you would take a trade on the next candle. And notice again, price came back down to 50% of this wick, and that would be your entry. And look at the outcome. Look how many days, more than 1 day, is complete reversal. The market took off. Okay, so this candle that we see right now has the potential of turning into a huge reversal based on what we saw, previously saw. It could easily just sit here like 3 or 4 days maybe before it collapses and comes back down. That's possible. It could also be that this is the end of a run and it may go back up. We don't know. The thing is that we know that this level up here on this particular pair up there, 166.74, is going to be very difficult to break. Okay, so how we could trade this on continuation patterns? We go to the 1 hour chart, wait for the retracement to finish, and then short it again. Okay, great. How many pairs do I usually watch? Anywhere from 12 to 15 pairs, but I'm looking for the same thing on all pairs, so it really doesn't matter if I'm looking at 1 or 15. I'm looking for just same thing. Is price exhausted? Is it hitting a strong support level? Is there a color change candle? So I'm looking at the same thing, and I'm looking at correlated pairs. So I'll take the yen pairs, all the yen pairs, line them up, and see if they're behaving the same way. And that's good because markets are very powerful. The yen is either selling off or is really strong, and you can see that across the board. These pairs are my favorite because they move substantial, they're correlated, and if you look, you can't even tell the difference between these pairs. They all look alike. They all did the same thing. Okay. So it's 8:26. Don't have any trades right now. I'm just going to stay in these trades, and I'll take some questions right now. What I'd like to do is take a break, come back later at the opening bell at 8:30 and see if we have any trades on other pairs. Because right now, when you come in prior to New York session and you see that the market's already done its daily range, you really don't have a trade, because you can't take a trade going in that direction because it's done its daily range. It started from Tokyo, and you can't do a counter trend trade yet because it's not the London close. So it's like you're in no man's land, essentially. You can't take a trade either way. Okay, so you've got to be very careful when you come to the New York session. You have to evaluate the market, and you have to see where has the market been before. And if it's put its daily range, you cannot take a trade in that direction. What you need to do is just wait for the London close, and maybe you'll get lucky and get a counter trend trade out of that, 20 pips or whatever. Okay, so I'll take a break, come back around 9:30. Unless you guys have any questions, I'd be happy to answer them right now. But I'll come back around 9:30 at the opening bell, see if we have any trades. I'm going to stay in these trades. I've got a tight stop loss, trailing stop loss. Hopefully we still have at least 3 or 4 hours. Well, let's see, more like 2 hours, 2.5, 3 hours before the markets really find, support, or no one's interested in selling anymore or buying. And then everyone starts looking to exit their positions, and then that's when we see the market turn around. Right, we should be looking, it's difficult. Anywhere from 8, 11, or 1 o'clock Eastern time is that you'll see the markets retrace. We may be seeing the beginning of a retracement right now because the market's oversold. Okay, and it's bouncing. We have a nice pin bar, and it is bigger than the previous candle, so that qualifies on Euro New Zealand dollar. So yes, we could see retracement right here, because that is a pin bar bigger than the next candle. So let's see what happens, and that would probably signal me to exit these trades. Let's look at the other pairs. Same thing. So yeah, what I'm going to do is exit these pairs, because all these pairs are showing strong support based on that color change candle and based on the pin bar. So I'm going to start exiting now. There's always going to be time to get in this trade, so I'm not concerned about staying in and missing out on a big move. I never worry about that. 255. There's always going to be a trade. Okay, so now I'm out of these trades. This has the potential to be a huge turnaround based on the daily chart. So all I need to do is wait for retracement and start looking for selling opportunities. I'm not interested in taking a counter trend trade now because it's way too early. So I'm just going to wait. Okay. So questions? Anyone have any other questions? There's no updates on the trade copier. I'm still trying to get at a minimum of 20 people to join, and I only have about 4 or 5 right now. I cannot do it unless I have 20 people. It's not going to be I just cannot do it, and we're working out the issues. They are coming together. It's going to be fine. Hopefully soon we're putting out a promo promoting trade copier. We should be able to get 20 people. I can't imagine not being able to get 20 people. So, and we're offering, we'll see what happens a bit. So anyway, I'll come back. Unless you guys have any questions, I'll stay for a few minutes. But I need to take a break. I got up way too early, so I'm feeling a little bit tired, and I need to have some breakfast and then I'll come back at the opening bell, see what happens around 9:30, 10 o'clock. There may be some, continuation around that time, but then we need to start looking for counter trend trades. Okay, and so the counter trend trades are quite simple. Look for a support level, and let's see if this qualifies, because, and before I leave, I'll just show you this. Here's a swing low, here's a swing high. So what I do is that I connect these two, and price, remember, broke the 161 extension, but it hasn't reached that 261, and that's what I would love to see, the market come back down, because it overlaps with the pivot point. And if it does get down to these levels, that would be a great place to buy, because it is, by the time it gets down there, and I don't know if it can, because that's a lot of pips, and the market's pretty exhausted. That would mean price would have to go another 200 pips. I doubt that's going to happen today. Okay, it's already put in, what, 358 pips. The day before, the market put in 320 pips. So essentially, it's done its daily range. Okay, its projected range, and that's how I calculate when the markets have, done their daily range, is that I count the number of pips the previous day. Even though the market's in an uptrend, it doesn't matter. Okay, the market put in 322 pips, and today it went down 361 pips. So it's already done its daily range, or projected range, even a little bit more than that. So I'm hoping that the market retraces, because then there's a lot of selling opportunity up here. Okay. Paul. Okay, so are the yen pairs retraced enough? You mean to sell or to buy? Okay, so we're in, and you notice this, if you would have taken this trade, London session, it went nowhere unless you took it all the way down here at that fib extension. 1, 2, 3, 4, 5, 6 hours. 6 hours we made over, if you took all those pairs, we made over over 600 pips. And look at the yen pairs. They just sat there. Okay. So I'll keep saying it again, even though I get requests to look at other pairs. Look at pound New Zealand, Oz, pound Aussie, pound Euro Australia. These pairs will move substantially. The others don't as much. And as much as I love trading the yen crosses, they're not as much fun as trading these other pairs. Okay. So I'm going to take a break. I'll come back and let's see what happens around. Oh, to sell, Paul. Yes. I mean, there's definitely, and how do you, let's calculate this. Okay, let's look. All right, here's the swing high, here's the swing low. Price bounced off the 50% retracement level, but it's just hovering there. We don't know what it's going to do. So you can do two things. You can draw a trend line, swing low, right there. Here's your trend line, and you can draw this. You can draw another trend line, and there's your wedge right there. So you're essentially waiting for a breakout. And it's great when the markets consolidate, because especially around the main pivot point, because they're either going to break above and head north, or turn around and continue heading south, continue that pattern. Right now we don't know. We're sort of like in a holding pattern. We don't know what the market's going to do. Technically it should turn around and head south, and then the market would be below the main pivot point and the 21 moving average line, and that's easy. That would be an easy trade. But I'd be looking to get out at the swing low, because this whole area down here is essentially a buy zone. Okay? And this is up here is a sell zone. So we're caught in between these buy and sell zones. Okay, so we don't know right now where the market is doing. I would suggest is lining up all the yen pairs and see if they all take direction up or down. Okay? So I'll take a break, come back at 9:30 for the opening bell, and I'll just see you guys then, okay?